Hi, my name is Chris Venezia. I'm with Ekman Wealth Management. I'm an advisor there, and today I'm going to be talking to you about the retail part of the economy. We're in earnings season, or we're wrapping up earnings season, and towards the tail end of earnings is when you get a lot of the retail reports, which for a geek like me is something I really look forward to. It's been something I've found very useful, really going back to the pandemic. Not that it's not always useful. It's just it's been more useful because consumer patterns have changed and changed so rapidly over the last 3 years. It's good to get that perspective and that commentary from a wide variety of different companies that operate in a wide variety of different spaces in retail. So I'll start with the trends and then I'll get really specific after reading through some of the commentary from a lot of different large, global retailers. So the first trend I think I'll point out is you see consumers switching more to private label, like a Walmart, a Target, Kroger. You're reading more about the consumer switching from the name brand to the private label brand as a way to save costs and lower their spend. You're seeing less spend on discretionary items. So think of that as, during the pandemic, someone would go to a Target, maybe come back with a board game as opposed to just buying the stuff they need. Hey, let's get a board game. So what's those jokes about Target? You go in with a list of five, you end up spending $300. You're seeing less of that. People have a list, they're sticking to it when they're going to Targets, the Walmart, the BJ's, the Costco's. You're seeing smaller baskets, and that's across the board at retailers from Home Depot to Walmart. You're just seeing, the basket size is shrinking. Of course, that goes back to a little bit on the discretionary side, and then what people are focusing on when they're at a Home Depot, for example. There's a lot of commentary on student loans, largely uncertainty there, but a lot of questions about the impact. Student loan payments resuming, coming up in about a month. What's that impact going to be on retailers? I think the final thing I'll say is guidance was timid across the board. You didn't really see retailers come out and give a very strong forecast of, hey, this is exactly what we're expecting in a tight range of expectations. You're seeing a wider forecast, and you're not really seeing a lot of confidence in what's going to happen in the next 3, 6 to 9 months with a lot of these retailers. And, student loans part of that, the global economy part of that, weakness in China, weakness in Europe. So it's hard for retailers to really nail down and pinpoint, hey, this is what the next 6 to 9 to 12 months are going to look like. So getting more specific, and I'll kind of try to break it down by different segments, but I broke down Walmart, Dollar General, which actually reports tomorrow. So Walmart and Dollar Tree are two which I flipped through, both at the same time, kind of recently, even though they're reported a bit apart. Biggest thing is they're noticing that when it comes to spend, a lot more of that spend is coming on the food side, right? So you have people coming into a Walmart, into a Dollar Tree. They're looking for value, especially when it comes to food. They're seeing higher traffic, but they're seeing smaller baskets, right? So people coming in, focusing on the food items, not getting the Nerf gun, the Nerf football, the board game, the Legos, really focusing on kind of that list that they have. Private label is a big part of it, right? Trying to save costs, looking for promotions, especially on the food side. Dollar Tree and Walmart also seeing a higher tier customer than maybe they're accustomed to, and we'll call it normal times, whatever that means. But they're seeing a higher tier customer come in. And once again, a lot of that is that maybe we'll call them upper middle class consumer that's trying to find value and sees Walmart with a promotion on avocados, or Dollar Tree has some promotion on frozen food items, and they're looking to take advantage of that by coming in. These are companies, Walmart, Dollar Tree, that have had to raise wages, which has certainly had an impact on margins. Also, impact on their margins too is just, even if traffic is higher, the spend is not as high as people, like I said, prioritize the list that they have, not spending on the discretionary stuff as much. Best Buy reported this week. Not too surprising from what you saw, but you're seeing tech spend down, you're seeing appliance spend down. A lot of people made these purchases during the pandemic. They made those bigger ticket purchases. They bought the new laptop, they bought the new television, they bought maybe some of those electronic appliances during the pandemic. So they're not really looking to Best Buy right now to spend those dollars, right? And Best Buy, I thought was interesting. They did mention that they're kind of waiting for that cycle to return, right? So you had a cycle, people went in droves, maybe 2021, got the new laptop, got the new television. When does that cycle come back? When do those TVs break down? When do those laptops break down? Right? When do people have to go back and re-up those tech devices that they bought a couple of years ago? And Best Buy, trying to be optimistic, mentioned maybe 2024 is when that cycle recovers. Also thought it was interesting. Best Buy mentioned credit card delinquencies getting back to a more normalized level. Right, delinquencies were lower for a good part of the last couple of years with some of the COVID stimulus that came in. We saw that kind of return back to, or they mentioned that returning back to normal levels. So delinquencies rising, not to a concerning point yet, but certainly something to watch going forward. Do we see credit card delinquencies get above where they were in 2019? Target really struggled with their earnings. They really hammered shrink, which is people stealing. But I think the biggest story about Target, outside of some of the inventory problems they had last year, it's just what I talked about at the beginning of this video. Is people are going to Target, they're not doing the thing where they're spending $300 with a 6-item list. They got 6 items on the list, they're getting those 6 items. Target really enjoys a boost when people come in on those discretionary goods. Buy the T-shirts, buy the Pokemon cards, buy the board games, buy the toys. Right, get that really big basket of a wide variety of items. It's just not happening right now. The spend's not happening at Target. People prioritizing what they need. That hurts a company like Target, which really relies on the discretionary spending. Sporting goods extremely weak. Dick's, Foot Locker, both also mentioned shrink and theft. But really, when you look through it, you're seeing margin pressure. I thought it was interesting. Foot Locker mentioned a consumer really looking for promotions, right? So if they're buying sporting equipment, if they're buying shoes, they're really, really trying to say, hey, where can I get a deal right now? As opposed to 2021, you get a stimulus check, maybe you can spend more money on the nifty, what is it, A2000 when I was young was the big baseball glove. Maybe you could spend more money on those items. Consumers now really, really prioritizing deals. We saw a lot of the sporting goods side. Home improvement, Lowe's, Home Depot. Biggest thing I took away from them, if you're still not seeing the home renovation, once again, 2021, people redid the backyard, they redid the deck, they redid the closet. So you're not seeing those big do-it-yourself home renovations as much, and that's hurting them. They are still seeing people come in. It's just a difference in what they're spending money on, right? It's people coming in, and maybe they're replacing the faucet in the guest room as opposed to redoing the deck. And of course, that's it's cheaper to replace the faucet than it is to redo the deck. Retail in terms of clothing and apparel, very mixed. Week for the most part. Abercrombie was a surprise. They've apparently reinvented themselves. They mentioned commentary, their CEO talking about really targeting that like 25 to 35-year-old that maybe shopped there when they were in middle school and now is going back and buying, work, what they call work leisure type clothes. They mentioned kind of like the early 30s woman coming in and buying clothes from Abercrombie that they can wear in that return to office, but that's also maybe more comfortable than some other clothing. Outside of Abercrombie, pretty weak. Macy's, Nordstrom, certainly some weakness there. Macy's, one of the things I thought was interesting too. Another company that just mentioned the credit cards, delinquencies picking up. They're not saying it's at a concerning level at this point, but it is something to watch as we look ahead. Do we see delinquencies get above what those 2019 levels were? What is the stress on that consumer? It varies based on the consumer, but delinquencies is a good way to keep track of that. Luxury brands, Tapestry announced a huge merger with Capri, which is a pretty big deal in the luxury space. Luxury's challenged. Main point I took away, I thought this was interesting from Tapestry and their commentary. They talked a lot about the weakness in what they call the aspirational consumer. So, that person that, is at a certain income level, maybe wants that really nice bag, wants, I guess, the expensive shoes, but is challenged right now with, inflation, student loans coming back potentially, and maybe they can't make that big handbag purchase that they could make a year ago. And that's, I think, one of the things that I thought was interesting from Tapestry is them commenting on it's not the high-end consumer necessarily that's hurting them. It's more of that consumer that reaches for those luxury products that's unable to make that reach right now. I think I'll finish by just talking about looking forward. And what are we looking for coming up? For me, the biggest thing, the impact on student loans. Question came up a lot. Wasn't a lot of firm answers. A lot of we'll see what happens. Student loans. It's tough to get a gauge, right? There are a majority of Americans don't have student loans. There's some new student loan programs that were announced that maybe help keep you know the student loan payments down. But certainly, I'm really curious what that student loan impact is going to be the next 3, 6, 9 months for retailers. I touched on this already. Credit card delinquencies. Do we see those continue to rise at Macy's, at Best Buy, or do they, kind of hit this pre-pandemic 2019 level and stay there? And then I think the final thing I mentioned is, do we see cycles normalize, right? On the tech side with Best Buy, right? Do we see a normal spending pattern of people buying laptops and electronics like they did, 2018, 2019? Home improvement, do we see that start to normalize? It's just really challenging because it's been such a strange pattern over the last few years of everyone at one point buying the appliance, doing the home renovation, buying the electronics, even some of the patio, buying the gazebo for the backyard. Now there's this lull where people don't, you don't need three gazebos in the backyard. But at some point, do cycles start normalizing as stuff just breaks, as appliances breaks, as the grill gets dirty? So I'm certainly curious. Do we see that, kind of get back to a more normal pattern in 2024? And honestly, I'm curious, is this just the new normal for electronics, appliances, home improvement? Do we just get these boom bust cycles because everyone bought stuff in 2021 and then stuff breaks in 2024, but then everyone buys stuff in 2024 and then what's that new cycle going to be as we come out of what's been a very unique past couple of years? Certainly, if you want to talk about this more, if you disagree with me, you can obviously comment. We also have a Calendly link if you want to schedule a call and talk to me. Advisor at Ekman Wealth Management, so can talk about personal financial situations. Also, just curious to see what, more than anything, the student loan impact. If you have student loans, have you thought about that in terms of your budget? And are there things you're looking to cut out of your budget as those student loan payments resume? So thanks for taking the time. That's pretty comprehensive rundown on retail earnings. I hope you learned something.